Hello, everyone, and welcome to today's webinar. My name is Joanne Mark Jones, and I'm the head of content here at Charity Digital, and I'll be your host for today's session. I'd like to say a warm welcome to all our attendees. Please do introduce yourself in the chat and let us know where you're joining us from. Quick introduction to Charity Digital. We're a registered UK charity, and our mission is to help other charities increase their impact by using digital. We do this through two main activities: providing access to the software products charities need at dramatically reduced prices, and publishing content, webinars, and other events that educate charity professionals and volunteers on how to make better use of digital. So today's session explores financial reporting and how your charity can reduce your reporting cycle. Our presenter, Grant Gethers from Sage Intacct, will show you how to simplify your chart of accounts, how to report without Excel, how to streamline month-end processes, and so much more. Before we begin, I just wanted to share a few house rules. The session is being recorded and will be uploaded to watch on demand within a week. Any slides will be shared together with any relevant resources, so don't worry if you've missed anything. Closed captions are available for today's session. To enable these, go to the bottom of your Zoom window, click the up arrow button next to closed captions, then click show subtitles. During the webinar, please put all questions in the Q&A section, which is located in the menu bar, which Grant will then address at the end of the presentation. If someone asks a question that resonates with you, then you can upvote it by clicking the thumbs up icon, and this will upvote it, so it will go to the top of the sort of list, and then we can ask that question first and the most pressing questions first, essentially. And finally, if you encounter any sound or image issues, please let us know in the chat, and we'll do our very best to get the session back to normal as soon as possible. So that's all from me. So without further ado, let me hand you over to Grant. Grant.
Great. Thank you very much, Joanne. Okay, well, good afternoon, everybody. So my name is Grant Givers. I'm a senior solutions consultant here at Sage Intacct. And I've been working with Sage products now for over 20 years. So I kind of started out in support. So if you phoned through for first line support, you would have spoken to me about 20 years ago. And since then, I've done implementation, training, but now just focus kind of on the technical sales side. So I'm responsible for taking customers through any potential customers, prospects that are looking to engage in a digital transformation journey, to actually guide them through that process, have a look at all the different tools available to you within a financial management system, and just demonstrate the benefit and the value of using technology like that to help solve some of the business problems that nonprofits are facing. So today's webinar is called Shortening Your Charity Reporting Cycle. And we're going to be breaking it down into 3 key steps. So within the 3 steps, we're going to cover how you can achieve that faster close. But I think that everybody who's working in finance will know the feeling and the stress that month end can sometimes bring. So, with limited resources, most nonprofit financial management teams are stretched really thin. So every month end or quarter end or year end, the team is under enormous pressure to complete the financial reporting while still trying to keep up with a myriad of other tasks. So technology should really help to lower that burden. But sometimes it may feel that you're having to fight the accounting system, to get the information and the insights that your management team needs. So if your team feels stressed out, maybe spends too much time doing manual data entry and manipulating multiple reports in Excel, we're going to be exploring how a modern cloud financial system can bring relief to your team and transform that month-end process into a well-oiled, efficient process. So what are the benefits of speeding up that reporting cycle? So firstly, you've got timely financial reporting. So a shorter close cycle allows for quicker preparation and dissemination of all your financial reports. This timeliness is crucial, maybe for providing stakeholders, including funders, management, any regulatory bodies, with up-to-date and accurate financial information. And second is improved decision making. So faster access to financial data enables management to then make more informed and timely decisions. And this can be, really important in a dynamic business environment, where quick responses to market changes can mean a competitive advantage. And then third is increased financial efficiency. So, streamlining that close process often involves identifying and eliminating any bottlenecks, redundancies, and any inefficiencies. So, this can, in turn, enhance the overall operational efficiency within the finance department as a whole, but also in the organization as a whole. So, those are some of the key benefits to shortening that close cycle. So, next, I'm looking to engage with you as an audience. So, I'm going to be asking one of my favorite questions. I enjoy asking prospective new customers this question. It's one that gets a range of different responses. I've had people laughing, sighs. I've not actually had anybody in tears yet, but I'm sure some have felt close to tears. But how long does it take your finance team to close month end? So I think you should actually have a pop-up that should be appearing on your screen now. And the options that you have is less than 1 week, 1 to 2 weeks, 2 to 3 weeks, and the other one is actually just over 3 weeks or longer than 4 weeks. So again, how long does it take your finance team to close month end? That's less than a week, 1 to 2 weeks, 2 to 3 weeks, or over 3 weeks. So I'll just give you a moment or two to key in those responses. It should be within that pop-up. And in just a moment, we should be able to see those responses. There we go. Okay, so less than 20% have said less than a week to close the month end, which you're actually doing quite well then already. 1 to 2 weeks has been the majority at 48%, which is not bad. Uh, and then 2 to 3 weeks for the other 32%. So nobody over 3 weeks, which is good. Um, but what we are going to be looking at is obviously how to shorten that reporting close, and even just shaving off a day, a working day a month adds up to 12 working days in a year, or just 2 days can mean 24 days. So it really does make a difference just being able to reduce that close cycle. Right, so moving on, here is some information before we get into our 3 steps. Here's some details from a survey that we conduct worldwide here at Sage, involving 1,000 professionals. So there are many kind of built-in automation capabilities available with most cloud-based accounting software that can help to save time and reduce stress at month end. So 60% of respondents absolutely or strongly agree that automation saves time at month end. So respondents tracked or ranked the highest time savers to be journal entries, so templates for journal entries, pre-built dashboards and reports, and having an automated close checklist to keep track of those close activities. So not far behind that is the ability to have seamless data integration between core finance and other systems such as a membership CRM, a point of sale. So if you've got like a charity where that has shops dotted around the country, you may want to pull in your points of sale data into finance to report on that. So, with all these gains, it's not surprising that many organizations are adding automation into their accounting and financial processes. So we are going to focus on reporting and some of the tools to improve your reporting close process. So step number one is reducing the complexity of your chart of accounts. So this is where we start to come to the how. So like any building, you have to have a solid foundation. So your accounting system is no different. The chart of accounts is the platform for any accounts department. If you get the chart of accounts wrong, uh, that then has a knock-on effect on all of your reporting. So traditional accounting systems usually used a hard-coded or linear-based account code structure. So for example, you may have an account, let's say donations received, but then you have multiple segments after that account number, like department or project or grant, restriction type. You need to then, with that type of structure, create every combination uh, for all the various segments. And so the problem with that type of chart of accounts is that it quickly becomes very complicated and can create an unmanageable number of account code combinations. So I think the worst I've come across is one of our customers now, a long-standing customer on Intact, who had over 55,000 accounts on their legacy system. So I'd be interested to know if anybody in the audience has more than that. Please put that in the chat. But with a multi-dimensional ledger, your chart of accounts need not be more than around 100 accounts, so anything between 100 to 200 accounts. And then you can use dimensions. So dimensions can be there to tag any transactions. So it's a bit like using hashtags in social media. You can tag a transaction with one or multiple hashtags, and then you can start to report by those hashtags. So hopefully, with already having a less complicated chart of accounts, you can, as a team, will start to feel that stress melting away. But let's have a little deeper look at what a multidimensional ledger is. So, I mean, it is spoken about a lot at the moment, but really, what is a multi-dimensional ledger? So what I've got on the screen here will help to uh, explain the underlying data structure within a multi-dimensional ledger. So multi-dimensional ledger is made up of lots of different layers for reporting purposes. But you'll see that first across the top here, you'll have what is called or your centralized set of reports. So it's really efficient in the way that you're working with reporting. You'll only ever look after one set of reports. It doesn't matter how many companies you add into your environment. You can always share just one set of reports. And then underlying all of that reporting are our individual pillars making up that multidimensional ledger. So first, you've got your company. So again, you can have as many companies as you want in your environment. And the moment you've got more than one company, you can immediately start to do things like intercompany transactions. Also, we were talking just this morning to a nonprofit organization who does a lot of fund tracking, and they need to be able to transfer monies between funds. And so you can also set up funds as uh, companies, uh, and then it would treat it like an intercompany transaction. Underneath company, you can have locations. So that could be for things like charity shops, as I mentioned a little earlier. If you're in the care space and you have care homes, each of those locations could be set up as different homes. So I'm going to give a little examples of each of these in just a moment. But moving on to the account pillar. So within the account pillar, which is the central pillar, you're going to have your financial chart of accounts, which everybody should be, used to. Every accounting system will have one, but you'll also have a non-financial chart of accounts. So what that means is that will allow you to capture information that's critical to your mission. So things like number of volunteer workers, number of gifts received, number of meals served, whatever non-financial data is critical to your mission, you can then start to capture that, bring that to life in the dashboards, and merge that information with your financial data. So that one of the things, especially around the non-financial data, a lot of this information, it tends to be handled outside of the system in Excel spreadsheets at the end of the month, which is the kind of scenario that we're looking to avoid. We want to bring all that information into the system to let the system do that for you, because that's when you can really start to realize some of the benefits and gains around shortening that close. Also, within that account pillar, you'll have shared customer, supplier, and item information. And then the dimension. So we separate the dimension from the account. This then gives you a lot of flexibility when you're doing your reporting. So for example, if you're looking at dashboards, you can immediately start to filter across the top by the dimensions, because it's not tied up as part of that segmented account, is broken away from it. That gives you the ability to filter by them, also expand reports by those different dimensions. Okay, so to give you examples of each of these, I'm going to just show you, first of all, if we look at the company pillar. So you'll notice here that on the screen, we've got a dashboard. We're looking at some outcome metrics around a non-profit organization, and we're currently looking at information at the top level. So at the top level, we'll show you either aggregated or consolidated information within those dashboards. If you want to then open up a dashboard for a separate company or fund, you can click on that company or fund, which you can see in that drop down, and that will then open up a separate window where the information is then filtered for that company or fund. Then just to further illustrate that top level, you can see here in the structure there in purple would be my top level. And then below that, we've got the companies that make up the top level. So you can see just one level down, we're looking at all of those companies. So you can have as many companies as you want. As I mentioned, some of those can sometimes be used for tracking things like funds. There's no worries about scaling the system. So we can, there's with a multi-dimensional ledger, you can scale from really small operations right through to organizations who may be looking after 10,000 funds, for example. And underneath that, you'll see here we've got a care-based organization that has different homes set up as locations. I've got a helpline organization here that's being funded by different charity shops dotted around the country. So you can set each of those up as different locations. You can then do profitability by location. And then within those locations, you've still then got all of your dimensions. So that is the company pillar. Just coming back here to that dashboard. First of all, before we go and have a look at the financial chart of accounts, I mentioned within the account pillar, you've also got the ability to store that non-financial data. So a multi-dimensional ledger will let you, will bring both that non-financial and financial data to life within the dashboard. So for example, here we can see I've got number of gifts received, or the value of gifts received, number of gifts. Then you can divide the two to then give you average gift amount. So it also tracking things like meals served, volunteer hours, clients served, and that's all done through a separate statistical journal, which looks at a separate statistical chart of accounts. So you can create as many accounts in there as you need. And then you leverage the same set of dimensions as your financial charts. So you can see we're just increasing or decreasing these numbers. And that allows you to build that information into your financial reports. So you'll notice here that we've got a program expenditure report with a cost per client. I can see the summary of costs down the left here, and then we're expanding this by different programs that we have on the go. So under each program, I can see the summary of costs, and then you can then see that non-financial data there, the number of clients served under each of the programs. We can then divide those costs by the number of clients served to get a cost per client. So it's great to be able to then see at a glance if you need to go and secure any more funding for any programs or initiatives. So that's using that non-financial data. You've also then got the normal financial ledger, which I've just got a 4-digit code option here, so you can have up to 21 within that account number. If you had, say, I have a look at my salaries account. So the relationship within the multidimensional ledger between the accounts and the dimensions is set at an account level. So you'll see for my salaries, I require the department and the location to be populated. So if we go and edit my salaries account, you'll see how you've got the different dimensions available to you here. So I've got department, location as mandatory dimensions. If I were then wanting to expand salary costs by employee, for example, we could tick employee, save that. That will make it a mandatory dimension for users to then capture that information. But if I just run through some of the dimensions you will receive, so you've got here a department, a location, project or grant, customer, supplier, employee, item, and then restriction type. So it tends to be those 8 core dimensions available. There is the ability to extend the number of dimensions you have as well. And you can do that, and a lot of nonprofits look to add on some additional dimensions too. Then also part of that multi-dimensional ledger is what are called account groups. So this is really there to help drive the report creation process. So once you've got your chart of accounts configured, all of the different dimensions populated, you can then go and set up your account groups. So here's an income and expenditure account group. If we look at the hierarchy here, you'll see how that all of those accounts are then grouped together under these different report labels on the left-hand side. So under grant revenue, I can see all the grant revenue types I've got coming in, contributions in all the different forms, member fees, all the different types of income streams we have. On the expenditure side, there's my salaries account, and that's grouped together under personnel expenses with all the other personnel expense related accounts. So then when it comes to doing reporting, when you want to create a report, all you do is select the account group. It gives you this layout, and then you can define what level of information you want to see within the account group. So, for example, if I come back to this outcome metrics and we just drag into focus here, an income and expenditure report, there on the left-hand side is your account group, which is driving the reporting. So there's grant revenue, contributions, personnel expenses. If I drill into personnel expenses, you can then see the underlying transaction detail. So obviously you can continue to drill all the way through as well. So that's the accounts pillar. And then what you also have is the dimensions. So we've already touched on the dimensions, but you can see how that within that multi-dimensional ledger, it affects all of the systems. So we're looking at, our entities or companies across the top, our accounts or account groups here on the left, and then we can expand any report by a dimension. So I've done this by department. So I'm looking at actuals versus budget with a budget variance percentage here by departments, and then you'll see that we've got this admin department in here as well. So it's possible to create a hierarchy within a dimension. So I mentioned lots of different levels within a multi-dimensional ledger. Here, for example, if you go and have a look at the dimension, you'll see there's admin, and admin is made up of all of these sub departments. So you can go down multiple levels. Within that, you can then configure rules to allow, posting only to sub departments, and maybe block any posting to admin. So hopefully that gives you a better understanding of what a multi-dimensional ledger uh, is. So now that we've had a look at that, what are the benefits of reducing that complexity within the chart of accounts? So you saw the chart of accounts itself was only about 100 to 200 accounts. And then there is a lot more flexibility within reporting. So one of the big reasons nonprofit organizations choose a system with a multidimensional ledger is that you can then start to slice and dice and look at information in different angles. So whether that's maybe for creating internal reports for just you and your team, or maybe to create reports to any external stakeholders like funders, showing them how uh, you've spent their money. So, we've streamlined tracking as well, where, you have native dimension hierarchies that we had a look at a little earlier on. You can then report by hierarchy, or also use flexible on-demand groupings within the multidimensional ledger, and also even using custom attribute information that can also be used as a separate way to group information to pull through within reporting. Additionally, you can then pivot and look at the information in the way that you would like to see it. So here in this report on the screen, you can see how that's expanded by a location, which is just one of those dimensions. And I've got that across the columns. Then within the detail lines, you can see how we're expanding details within under utilities to show us the supplier information. So within a multi-dimensional ledger, within that account group, when you go and select an account group to create a report, you can say at what level you would like to show detail, and it will show the detail rather than having users drill down into the underlying detail. All right, so having this type of reporting flexibility means that you can provide funders with exactly the type of reporting they're looking for. Encourage complete transparency between you and your funders, improving your chances of securing any future funding. All right, so then talking about funding, also a very important part within any multi-dimensional ledger, especially for an organization that is uh, looking after funds, is maybe using one of those dimensions to be able to track funds. So, speaking to a lot of nonprofit organizations, again on a day-to-day basis, you've got this information that's being held outside of the system in Excel spreadsheets again, and but with this, you'll be able to bring your information into the system, be able to then report on it using that a multidimensional ledger. You'll see how we can then track the number of grants received. This can also be used for organizations are maybe doing giving out grants as well. This is kind of focused more on the grants being received, how much was awarded, how much revenue taken so far, how much is remaining, and then you can tag any transactions with the uh, with the grant dimension, and then build up a tally here of what is going to be reimbursed, and we can see a running total here of remaining funds. So this is all available as part of that multi-dimensional ledger. You'll see that for the grant types, you can go and set up whether it's a project, an event, endowment. Underneath here, I've got a multi-year grant. We can go and set up the relationships. So we've got the smaller grants which form a relationship with this multi-year grant, or it might be that you have projects that are being funded by different grants. So you can set up the relationships to reflect that. And also, you'll see the level of information that you can store against a grant or project or event. So a lot of information can be captured against that. You can also set up the relationships to other dimensions like the locations, the department, the restriction type, etc. Okay, so moving on then to step 2. So step 2 is all about completing reporting without having to export information into Excel. So if there's one complaint that we hear from non-profit finance teams, it's not being able to generate complete reporting in a format that's useful without first having to export that information from the accounting system and then manipulate that in a spreadsheet. So, when your team is already pressed for time and maybe has a mile-long to-do list, fiddling around with Excel reports can really bring on the stress. So, in addition to financial reporting, Sage Intacct also enables the easy integration with other systems. So part of that multidimensional ledger is also to hold information that's coming from some of the systems that form part of your organization that you want to link into finance. So the finance system really should be the central hub for any organization where you can then start to pull that information through that's relevant to finance into finance, use those dimensions to then get the level of detail that you're looking for in terms of insights and KPIs to then report on that data. So this is all going to help, yield deeper and wider visibility for that executive decision making, which we had a look at in our 3 key benefits. So, finance teams which embrace the highest levels of automation have 3 times as much time to spend on impact driven value added activities. So, this is because they can close the books on average 2 days faster than those with the lowest levels of automation. So, our research shows that just how significant a role automation plays in freeing up that time. So, in our recent survey, respondents with the lowest level of automation available only spend around 18% of their time on value added tasks, while those with the highest levels of automation at their disposal spend around 58% on these activities. Then moving beyond spreadsheets. So reducing your reliance on Excel means number one, greater trust and accuracy in the data. Because obviously you've got the controls that are available within the multidimensional ledger. The second point is you can allow drill through to source documents to verify the data. So because that reporting is all being put together within the cloud financial system, you can then drill down from those dashboards into the source transactions, open up any source documents to then verify that data. The third and very important point as well is that you can make sure that only those with the right securities can access your data. Obviously, it's difficult to do that within an Excel document, and those can easily be shared outside of the system uh, via email. Uh, but having that information in the system means that you can set up the securities uh, and control the access to that important data. Fourth point is that you can schedule reports or groups of reports to be sent out. So there's no need for, there's a number of ways that you can speed up that month end close by getting the system to automatically share those reports with budget holders, for example. Or you could just as easily give budget holders a login to be able to self-serve themselves. They can look at their dashboards, they can drill down into the underlying transaction detail. And the fifth point is you can also include commentary on reports to explain the data. So this is obviously a big benefit, if you like, to Excel, in that Excel gives you free reign to put in comments wherever you like. But within most modern cloud financials systems, you can add that kind of commentary now as well. And that can also be included in any of those automated reports as well. Okay, so a couple of examples here within this area. I want to show you, we've mentioned drill down capabilities. So if I come back here to that outcome metrics dashboard that we were looking at earlier, you'll see that, if I just put this one back, but I mentioned we've got, for the budget holders, what we could be doing is using those dimensions where the budget holder will just, if they look after a specific department, we could then, when they log in, they will just have that filter applied to any dashboards they are looking at, because that filter is set up against their user account. So again, that allows you to be very efficient with the reporting, but it will also enable that self-serve or self-service where they can drill down into the reports. So we don't have to, as a finance team, start to send that information out to the budget holders. You can see how you can, for example, here I'm looking at an income and expenditure, drill down into, say, office supplies, into a location. Then you can drill down here into this underlying source documents, into an invoice here, and you've got all of the information you need. Open up any attached documents. So it's giving complete visibility to the team. And then if you scroll down to the bottom left here, you can then see how we've also being able to capture all of the communications that happened around that transaction, to then help again from an audit perspective, but also just to keep everybody in the team on the same page. Then I wanted to show you, using that multi-dimensional ledger, just how simple it is to edit a report. So for example, we come back here, we're looking at a CFO dashboard. You will see how that you've got expenditure here with budget versus actuals, including any commitments. So you need to then maybe extend this report by some of those dimensions. So let's say logged in here as Tom. Tom's looking at this report. He can see that where they've gone over budgets, office supplies is about to run out of budget. That shouldn't be the case. So if he wants to investigate that, what he can do is then click on edit that report, do a preview, and now we can expand actuals here by any of those dimensions. So for example, we want to expand actuals here by department to see which department is taking up most of that spend. So if he goes back to the report writer, we can then go to the columns and then click on actuals and then choose to expand by department. Remember, department has multiple levels as well, so we can say all levels with a summary balance and then preview. So that's going to give us all of those sub-departments here as well. And you'll see there in the center is my admin department. To the left of that are all those sub-departments. And then we can see all the other departments. So under closer inspection, Tom can see there is the admin department that is taking up most of that spend. So if he wants to maybe expand that number by supplier, what we can do, we're looking at this in summary at the moment, but you can also then use the dimensions within that multi-dimensional ledger to expand the details within rows as well. So if we go to rows now and go down to the office supplies and then choose to expand here by supplier, and that will then give us supplier details here as well. So you can see there is a Vodafone invoice that somebody keyed to office supply. So obviously somebody put that to the wrong accounts, which obviously happens. And that's one of the other kind of time-consuming areas around month end, is also picking up all of those anomalies, making all of those adjustments, and that. So being able to collaborate while doing that process also helps to reduce some of that time. So if we drill down here into the source transaction, Tom could actually make the change here himself if he wanted to, or maybe just using the collaborate tool, you can get somebody specifically in the team to say, please correct this invoice, thanks, and then share that. So that will actually create a hyperlink to that transaction and send Carla an email. So she will be able to then click on that. It'll take her straight to the transaction to make that adjustment. So it's all of these small little gains that help to make sure that nothing is missed out during month end, and it also just adds a lot more efficiency to that month end close process. So moving on then to our third and final step, which is some of the month-end tools and collaboration. So I've already highlighted to you, the benefit of using that collaborate tool, how we can maybe start to, with specific transactions, highlight what needs to be adjusted. But what I want to show you here is some of the tools available to your finance team to further improve control around month-end close, improve collaboration within the team, and help to reduce the inefficiencies and the potential bottlenecks. So just before I do, here's a question for you about your month end. So what are the main areas slowing down your month end? So it'd be good also to hear from you if you want to put some of those into the chat. It'd be interesting to see that. But here are some of the details that have been shared by respondents to our Close the Books survey. So transactional bottlenecks are also a major contributing factor to the delays being experienced by finance teams. So this includes, month-end tasks like, processing of journals. Also bank reconciliations. So, being able to connect and pull live statement information through, and also reviewing transactions for any anomalies. So a lot of these tasks are being completed manually, but a modern, cloud financial management system can introduce efficiencies here through automation. So there's significant time savings to be found, especially within these top 3 transactional offenders. Benefits which around half of those actually that we surveyed could take advantage of. So 56% rely on manual processes to check for any errors. So now there's also, the ability to use AI to pick up any errors, and that can help towards shortening that close cycle. There is 51% lack any automation to create journals, and only 9% of organizations here see themselves as very automated. And then the final one is just 47% said that they have no live link to their bank accounts. So they having to either manually process those bank reconciliations or maybe import that data manually themselves. So there is a lot of benefits and little tools that can help speed up this reporting close. So for things, for example, like uh, automatically sending out reports. So you can have the system, uh, automatically send reports out instead of either manually downloading those, sharing them. And I know that can be quite a time-consuming task for a lot of finance teams because they are being relied on to do that themselves. And so budget holders are waiting for their information from finance before they can move on. There is the collaboration, which we've already had a look at. I mentioned AI. So what we can do, we're starting to see more and more AI feature within a lot of financial processes within the accounting system. So for example, you could be importing information into the system. So if you turn on something like GL outlier detection using AI, what that will do is it will analyze all of your postings. So it will look at the counts you've posted to, the dimension combinations you've used, the values and debits and credits flowing through those various combinations, and it builds up a picture of what your standard posting practice looks like. Then, if there's anything outside of the ordinary that comes into the system, it will then flag that to you and then send that through for approval. So it's one of the ways that AI can actually help with picking up some of these anomalies within the system that might be slowing down that month-end close. Some of the other tools are being able to, create journal templates where you can maybe just copy from journals, set up recurring journals, and also being able to connect to pull through that live statement information into the bank reconciliations screens. Okay, so that's some of the tools available to you. I'm going to be moving on then, also talking about the continuous close. So most modern cloud financial systems should provide a continuous close. So a continuous close or continuous accounting is another way to ease stress at month end. So it allows you to then run month end close processes throughout the month. So rather than all at month end. It's an approach that captures data in real time. It enables continuous reconciliations, allows you to make adjustments as you go. So, continuous close gives you a clear and an accurate picture of your financial numbers at any given time. Without having to go through a period end close procedure in order to see the reports. So this also includes a year-end function. So there is no year-end function. The system will always be posting to that reserves or retained earnings account throughout the year. So this is also part of that continuous close functionality. And then the continuous close is a growing trend in accounting. So, as our survey showed, more than 50% of respondents absolutely or strongly agree that performing accounting automated accounting processes throughout the month really does help to reduce that month-end pressure. So, in summary, then, here are some of our key findings. So, on average, teams are taking around 7 days to close each month. So, that's amounting to 90 working days a month. And then through the use of technology, you can save around 24 days. So if you answered in that poll that we had earlier, anything more than 7 days, there's a lot more savings to be had here. But finance teams who do make good use of technologies have on average 3 times as much time to spend on those value added tasks that we saw earlier. And also, 82% of finance leaders are using technology to save on headcount costs. So, just to add a little bit more context around this last statistic, we're talking to a lot of nonprofits who are looking to grow, to scale their organization, and they're not wanting to grow and scale the back office in line with that organizational growth. So this is where technology can help enable that growth without the need of adding on additional staff. You can simply enable your existing team, give them the tools they need to be really efficient as you grow. And finally, in closing, seven signs that it's time to change. So here are some of the key uh, signs here that your existing systems might be creaking at the seams. So first of all, lack of automation. So if your current system lacks any automation, it may this lead to inefficiencies, errors, and increased processing time. Second is if you're experiencing any scalability issues. So if your organization and the current finance system struggles to meet that demand, instead you may be looking to have to hire more staff to cope. A third, if you which is reporting challenges. So if you're finding it difficult to generate accurate reports and timely reports to get the necessary insights that you need. Fourth is around compliance. So if you are struggling to keep compliance using technology that's outdated, or perhaps just using software that wasn't designed to work for the nonprofit sector. And fifth is you are, oops, unable to connect using modern APIs to any other operational systems to enable that smooth flow of data. And sixth is user feedback. So if your finance team is consistently providing, negative feedback, complaining about their using the existing system, this is an important point. To attract the right talent to the organization, the system does play an important part. And then finally, is cost concern. So if you assess the overall cost of maintaining and operating your current finance system, that needs to include the hours spent on manual processes, IT costs possibly for supporting existing servers, maybe the costs of adding additional headcount to the team. So if these costs are disproportionately high, then moving to something like a modern cloud financial system could actually prove to be really cost effective. Okay, so that brings me to the end of our content, and we've got some time to allow for some questions.
Yeah, thanks so much, Grant. I appreciate that. It was really thorough. The
No
first
problem.
question I'm going to ask actually was in the chat, and it was which version of Sage is this?
Okay, this is Sage Intact
Okay.
Financials. Yeah,
Yeah, oh, cool. So it's not a particular version, just Sage Intacct Financials.
yeah.
Cool. Thanks so much. Anne asked, how easy is it to transfer the data to Intacct? We have an on-premise Sage Line 50, and I also use Sage Intacct and Copilot. Are these interactive with Sage Intacct?
That's a good question. Yeah. So we've got a tool for our Sage 50 customers. So if they uh, we can take your Sage 50 data and then convert that into a format that Intact would recognize. That would be like in an Excel file for you then to go and review, because it might be that you want to do a bit of a data tidy up and clean up some of that data before we bring that into the Intact financials. So there is a proven kind of process already available for our Sage 50 customers. For maybe other customers who are not on Sage 50, we would just use the templates to import any information into the system.
Okay, bro. Anne's asking, does Sage Intacct have the facility to have budgets as this is one of the monthly reports they use. So I think
Yeah,
budget comparison versus year to date.
yeah. It's another good question. Yes, absolutely. Yeah, so you can do your budgeting. So you can have multiple budgets. Might be that you want to have a budget, you want to have your forecast, you want to have your actuals, you want to do variances against that year to date. So that's something that's available. You can either import that budget information, or there's a planning tool that you can use, which can also eliminate the need for any CSV file manipulation. You can do that in the system. Again, introducing more controls, give access to the budget holders to a system interface rather than an Excel spreadsheet to put their budgets in, and then that can be approved and pushed over into Intact.
Bro. And next question is how does it interact with invoice PDFs as the person uses auto entry at the moment?
Right. So, yeah, I touched on AI a little bit earlier on. So, with AP automation, this is one of those areas that we also starting to see AI feature, so that it will read that invoice information in, whether or not you use an or APO or not. We can read that information in like an auto entry would do,
Mm,
using the AI. There's very little configuration that goes into that because the AI is actually doing all of that learning process. So probably you just go through about 3 iterations of an invoice, and then it will have learned where that should be coded.
cool. John is asking, how easy is it to import advanced budgets? So Sage 50 currently doesn't allow importing advanced budgets. Is there that option here, or is it easy?
Okay, I'm not exactly familiar with what advanced budgets are in Sage 50 because I don't really know 50 very well. But
Oh,
uh, maybe, John, if you want to just explain the difference between the advanced budgets and normal budgets, then I can
yeah. Well,
help with that one.
if John can type that in, but we'll move on to the next question and we can come
Okay.
back to it. So this is from Anne. I'm not sure it's a question, but journal entry templates would be very helpful, or even memorizers in the way of sales invoices. Can you speak on
Yeah.
that?
Yeah, absolutely. I think that was one of the benefits that people said would be a big time saver, is being able to create those journal templates. There is also the option to take any of the historic data, like sales invoices, for example, and just go and copy to the next period. So you can, it saves you from having to go and rekey that transaction. It's all of these little things that really does contribute to that month end close and making sure that everybody can close quicker.
Well, someone has commented saying they use advanced budgets in Sage 50, so that may answer John's question, I think. I have a question about personalization of the automated reports. So if you have
Mhm.
an automated report, could you personalize who receives what part of a report? So
Yeah,
I guess I'm worried about the granularity of the reports or that stage of
yeah.
automation. Could you speak on that a little bit?
Of course, that's a good question, because this is one of the benefits of their multidimensional, again, because you've got a lot of efficiencies in that you could have a report that's just broken out by departments. So you just have one report to look after.
Mm,
But then when you set up a schedule, you could schedule it to say, let's only send out the information that's relevant to specific departments as part of that schedule. When it sends that out, it's going to send it out filtered for those departments.
Okay. Cool. Yeah. I've got another one. So
Mhm.
with you the example earlier with your dashboard, are you able to alter that to give different visuals? So, for example, the pie graphs, the bar
Yeah.
graphs, the pie charts, and everything like that.
Absolutely, yeah. So those can all be tailored. I mean, you could see I just moved stuff around on the
Yeah.
dashboards. There are a number of them that come as standard with the system, so you can, personalize them. You can lock them down to individual users or groups of users, and yeah.
Oh, John has come back. Advanced
Yep.
budgets allows one to enter monthly budgets against each nominal code department and charts of accounts, whereas standard budgets allow budgeting to nominal code only.
Okay. Yeah. So then we would definitely do the advanced budgets there, John. Yeah.
Cool. Hope that answers your question. And we are at time. So I'd like to say thanks again to Grant for a really great presentation today.
You're
I
welcome.
learned loads. um, hope everyone else did, and thank you to everyone who joined us today. Our next webinar, just to mention, will be on the 6th of March, and that's on empowering charities with Slack AI and Agentforce. And we'll pop a link to the webinar in the chat. Finally, if you could share any feedback with us, that would be fantastic. We're posting a link in the chat now, and you also should receive a prompt after you leave. That's all. So thanks again, Grant. And yeah, thanks for joining us, everyone.
Thanks, everyone. Good to be with you.